Hello everyone and welcome to Day Trader S&P 500. It's Friday, May 23rd, 2025. This is Dale Woodson, editor of Woodson Wave Report. I want to wish all of you Americans celebrating a happy Memorial Day. Just a reminder to everyone that the markets will be closed on Monday for the holiday. Okay, let's get into our analysis. We're going to look at the US10yr because it's a big deal, let's put it that way, okay? We're looking at this 2 down is from the 1 up, which was way back in 2020 to, what was that? Way back here, yeah, 2023, okay? But we're focused on the more near term here. We have a 1 up from that 2 of the circle low at 4.806%. and a 2 down here, which was a direct hit to within 1/1000th of 1 percentage point of our target. Okay, then from that 2 we had a 1 up and a 2 down, which was another direct hit within what 1/100th of a percentage point. Anyway, so we always know where we're right and where we're wrong. We ask ourselves, where is it wrong? Well, this move up to this 1 is wrong if it goes below this wave 2 in a parentheses low, which it didn't, okay? We had a wave 2 down, like we said before, which was a direct hit on our Fibonacci 618 target. Where is it right? Okay, we just described where it's wrong. Where is it right? When this wave 1 high is surpassed to the upside, which just happened yesterday, okay? So we should be getting wave 3 up above this, and the first target, the initial one for this wave 3 is 4.854%. Okay, this is a third wave within a larger third wave, the parentheses 1, 2, and that third wave up in the parentheses gains equality with 1 at 5.044%. Keep in mind these are third waves. They'll probably gain a Fibonacci 1.618. So these are initial and minimum targets, okay? This wave 2 low, again, we'll have to hold for this count to be proven right. And this looks like 1, 2, 3, 4, 5 waves up to that higher high above wave 1. So let's just do a quick Fibonacci retrace on that to see what we might expect for any kind of move down from that high, okay? There's the 5 waves up. The 382 is 4.435%. The 50% retrace is 4.376, and the 618 is 4.316. Okay, for what it's worth, the 786 is 4.232. Again, if it goes below the 4.124, it's wrong. But it's already been proven that this 2 is correct and this 1 is correct with this move up above the wave 1 high. So that's what we're looking at. Do I have the 1618s up there? Yeah, okay, for this wave 3, the 1618 is at 5.305%. And for this 3, that's going to be up there. That's going to be 5.776%. The Fed's not lowering rates anytime soon. Rates are going up. The Fed follows the bond market. The bond market leads. The Fed follows. And the tail does not wag the dog. Okay, the dog is the bond market and the tail is the Fed. They're meaningless, they're useless, and all they do is follow the market, and that's all they've ever done other than mess up things. So, but they get blamed or credited, and they shouldn't have any blame or credit. They're useless. Okay, enough of that, because I've been talking about this for, I don't know, 30 years, and it keeps proving right. So look for higher rates. Higher for longer. How does that sound, guys? Okay, let's get into the NASDAQ here. Let me see if I can get the NQs. There we go. Let's get this out of the way. And let's make this a big chart. Okay, this is a mess, but we'll go in a lower time frame to make that look better. Okay, the big picture here on the daily chart is a 1 down, a 2 up, 3 down, 4 up, and 5 down to complete the larger wave 1 in parentheses. We've got a 2 up, which went just above the 786, and so we're looking at things from this. Okay, this 2 cannot go above that 2. That's where it's wrong. Okay, so this wave 2 high at 21,562 and a quarter should hold. So far so good. So let's get into this at a different degree of trend. We'll go hourly here. All right, let's go 10 minutes. I like that better. Let's do the 10-minute and see what we got here. Okay. Bear with me while I extrapolate this out for you guys. There we go. There's that wave 2 high. Okay, so from there we have a 1 down and a 2 up, and then a 1, 2, 3, 4. It's similar to the S&P. This 4 did not overlap that one. And wave 5 targets here for the third wave of a bigger degree, and wave 5 are 20,501, and the 1618 is down there at 19,985. I think I have that in, let's see, we got that NQ handy here, presentation auto, and let me see if I can grab it over here. Let's get that NQ, there we go. Okay, and oh, I want to tell you guys about our triggers and targets. There's our, that's the name of our system. Okay, we also have a triggers and targets subscription, but this is the name of our auto trades. Okay, and there's our results in the last 3 months. Haven't been around long enough to do 1 year yet, but so far so good. Okay, we had a good day today too. Here is that daily chart. Same thing we showed you before. There's those wave 3 targets, maybe easier to see right there. A clean 5 waves down to complete wave 1 with the parentheses, and a big retrace above the 786 for wave 2. That needs to hold. You can see this thing unfolding here. Okay, and then wave 3 down is confirmed with a move below the wave 1 low. I know it's a long way away, so as always, we look at the shorter degree of trend, which in this case is that 10-minute, which is right here, which is what I just showed you guys. And there is the 1, 2, and then the third wave is unfolding as 1 down, 2 up, 3 down, 4 up, again below the wave 1 low, and then there's our wave 3 targets. Okay, so that's what we're looking at for the NASDAQ on a shorter term. I want to get to circuit breakers. If we're in a third of a third wave down, you might want to keep these in mind. These are how long they'll halt trading when and if these declines are met. And last time I remember them is during 2020 in February and March during COVID. That happened several times. In fact, sometimes they opened up and within the first 5 minutes they closed down because huge percentage declines. Okay, so if we're in a third of third wave, look for gaps down and all that good stuff. Okay, let's go into, get back to our charts here. There we go, and let's look at the ES on a daily basis. Okay, there's our daily. I really want to show you guys this because of the gaps. We did a special on gaps. I may show you that, but there's 3 gaps. There's a breakaway, a runaway, and an exhaustion gap. Exhaustion means toward the end. This one should get closed first, and that's at 56.78. Let me make that bigger for you guys. There we go. Now we don't have anything in the way, and let's pull this over here. There we go. Okay, so in purple we have a 1 or A down, a 2 or B up. Okay, and 3 or C should close all these gaps and then go lower than this low here, 48.32. Okay, we got to see again on the short term, we got to see this hold, and that is that 59.93 high on 520, and the red is the bullish count. Okay, and the red bullish count, it'll probably close these two, but 4 down equals Fibonacci 382 at 55.49, and it should not go below the wave 1 high, which is 55.28. So if it is a 4, it'll likely close those gaps, hit that 382, and then reverse higher for a 5. That's the bullish count. We always know on the bullish and the bearish counts where it's right and where it's wrong. Okay, so 4 down is wrong when it goes below the wave 1 high of 55.28. Okay, and then we'll look for this 2 or B to come into play when and if it does. That will confirm the bearish count. Okay, that's it on the ES. I want to take you guys to, let me get out of this full screen mode, and let's see that interim report from a couple days ago. See if we got that here. I think that's it there, 521. Bear with me. Yeah, 521. We haven't done a report in a while, like maybe a week for YouTube. We try to get more often, but there again is our triggers and targets. There's that bigger picture that we just showed you guys on the daily bar, and this is talking about closing those gaps. And there's that US Treasuries 10-year yield, interest rates. Okay, very important. And yeah, higher for longer is all I can say on that. All right, and this is all the verbiage on that. Our Fibonacci time spirals, we got 728, 67, and 728. Maybe we'll see some fireworks after the 4th of July on the 28th, or near the 28th. We'll see. We got 2 Fibonacci time spirals that target that. But the next one chronologically is June 7th, which is about 2 weeks away. Okay, so let's go from that. Let's find that. Let's do yesterday's market close report. There it is there. Okay, there's our triggers and targets again. Okay, we're at the precipice. If this is going to be a third wave down, this thing should cascade downward. There's our targets there. We got the 1 and the 1618. This was yesterday's close, okay, and today it went below that. We need to see a move below this 5828.75 low for confirmation that wave 3 in parentheses is in play, and we got it today, and there's those targets there. Okay, I don't know if we had anything else to show you guys there. Yeah, the same. Okay, so let's go from there to today's market close, which was just published a little bit ago. Okay, Friday the 23rd. Again, triggers and targets. By the way, to get to triggers and targets, I want to show you guys real quick. You go to our web page here, auto trade. Okay, and that's where you would open a futures account with Striker Securities. They are a futures broker. I am not, and I give them my trades, and then they trade my trades for you in your futures account that you open with them. I think I might have that verbiage in here to show you guys. Okay, maybe here. See if I got it in there. Okay, there's our most recent results. Here is that 10-minute on the E-mini futures. You can see it went up in a wave 4, made a lower wave 3. It went below that wave 1 with the parentheses around it low, confirming that this wave 2 up is complete, and we're in wave 3 with parentheses down. That should have a 2 up there on it. My apologies. Okay, and here's all the verbiage on that. That 2 hit within just a few, I guess 3 and some percentage points, 3.25 points of a direct hit on that 382 retrace for wave 2. I apologize, that 2 in parentheses is not there, but it was on that chart. Okay, and here's what we're looking at. We're listing the 2.618 multiple because it is a third wave, and if it is, it should at least gain the 1.618, if not the 2.618. So we'll see how it plays out. And so far, so good with that move below this wave 1 low. Okay, and this is playing out 1, 2. By the way, that was an expanded flat wave 2, where B goes below the start of A, and C goes above A. So it's 1, A down, A up, B down, C up for 2, and then 3, and then 4. Okay, and 4 did hold below the wave 1 low. So far, so good. Okay, let me scroll through here. Yeah, we're at the precipice. I think I have those steps needed to confirm a change in trend. We got all of them at 1 degree of trend. We need them for a next degree of trend. There's our triggers. Here's the auto trades information. Okay, you open an account with Striker Securities, a futures broker. I give my trades to them. They trade my trades in your futures account, which you open with them. The developers, me. Trading system is triggers and targets using Fibonacci extensions and ratios guided by Elliott Waves. I use the Ryan Jones fixed ratio money management system, limits our trading losses to 5% of the portfolio and builds on gains. And it's very important, because I've been trading for what, 30, 40 years, 3 or 4 decades, and it's important to have a trading system, and equally important to have the discipline to stay within that system. And I'm all about the math, as you know, no fundamentals, all numbers and math for its trading system using Elliott Waves and Fibonacci. But even more important, I learned over the years, is to have a money management system. If you don't, you'll be like 80% of the people who quit trading. They quit because they ran out of money in their account. If you limit your losses and have a money management system, that will keep you in play. Okay, so here's all that information for Striker Securities. If you're interested in doing the auto trades, contact them. There's those circuit breakers again. Let me put those all on one page. There we go. Okay, we're going to look at those 7 and 13 and 20% declines. There was a 20% decline in 1987. I remember it. I'm that old. Okay, traded them all, 2000 to 2002, 2007 to 2009, and here we are, maybe again in 2025. Okay, without further ado, I think that's everything. Let me look at this NQ. If I already showed you guys this, I apologize, going kind of fast, but there's the NASDAQ on the daily with the big picture showing the 2 up, which should hold below that wave 2 high, and here is the short term